Samco Large and Mid-Cap Fund is relatively new in the category but takes a data-driven approach to picking large and mid-cap stocks. But can it really stand out in a space full of strong competitors? Let us find out through an in-depth analysis in this video. Hi, welcome to holisticinvestment.in, where we help individual investors like you to make the right financial and investment decision to reach your financial goals in a more faster and smarter way. Now, before analyzing this fund, let us first understand what is a large and mid-cap fund. So these are equity mutual funds that invest in the stocks of both large-sized and mid-sized companies. So large cap companies rank from 1 to 100 based on market capitalization. So the market cap for these kind of companies is generally above 50,000 crores. So these are stable and trusted companies with proven track record. And mid-cap companies are ranked from 101 to 250 based on market capitalization. Approximate market cap ranges between 9,000 crores to 50,000 crores. So this offers higher growth potential compared to large caps. So why should we invest in large and mid caps? Because they offer a combination of stability from large caps and growth potential from mid caps. So there is balanced risk and return compared to pure large or mid cap funds. Now let us understand a few basic details about this fund. So as an NFO, it opens on 5th June 2025 and closes on 19th June 2025. Some of the key features of this NFO is it belongs to an open-ended fund type, and it also belongs to the category of equity large and mid-cap fund, and it follows the benchmark index of Nifty large mid-cap 250 TRI, and the exit load for units in excess of 10% of the investment, 1% will be charged for redemption within 12 months, and there is no entry load, and the minimum investment amount of this fund is 5,000 rupees, and the fund managers for this fund are Mr. Dhaval Ghanshyam Dhanani, Ms. Nirali Bansali, Mr. Umesh Kumar Mehta. And according to the riskometer, risk involved in this fund is very high. And the primary investment objective of this fund is to provide long-term capital appreciation by investing predominantly in equity and equity-related instruments of large cap and mid-cap companies. Now, as we have a basic understanding of this fund, let's move on to the analysis part of the video, where we are going to take a look at the pros and cons of investing in this fund. So first, balance growth plus stability in the pros section. So with the mandatory exposure to both large caps, which is minimum 35%, and mid caps minimum 35%, these funds aim to offer large cap stability and mid cap growth potential. And second, diversified portfolio by design. So SEBI structure ensures that these funds don't overly tilt to market segment, making them suitable for moderate risk long-term investors. Number 3, ideal for core portfolio. So they can serve as a core component of a diversified mutual fund portfolio, especially for those who want one fund that balances risk and return. Number 4, active management opportunities. Fund managers can switch between large and mid-cap allocations beyond the minimum 35% based on market conditions, potentially capturing trends better than rigid index funds. Now, these are the pros, but let's move on to understanding the cons. So first, there is no performance history. Since it's a new fund offer, there's no track record to judge the fund manager's performance or how the fund handles market volatility. Number 2, execution risk. The fund success depends on how well the fund manager identifies and balances large and mid-cap opportunities. So the strategy is key, but execution matters more. And number 3, mid-cap volatility. Mid-caps, though promising, are more volatile. A 35% plus allocation in these can increase short-term downside risk, especially in corrections. Number 4, fund house reputation matters. With NFOs, the credibility of the AMC and the experience of the fund manager are vital. Lesser known AMCs may have more to prove. And another thing to note is some funds drift from the mandated 35 to 65% allocation balance. This could dilute the fund's original positioning if not monitored. So, what is the final takeaway from this video? A large and mid-cap fund NFO can be an interesting choice for investors looking to strike a balance between stability and growth. The built-in mandate to invest in both large and mid-sized companies gives it a unique advantage, offering defensive strength during market downturn and growth potential in bull phases. But as with any NFO, the biggest limitation is the lack of performance history. You're investing based on the fund house's philosophy, team, and strategy, not actual results. So, should you invest? That depends on your risk appetite, investment horizon, and trust in the AMC's capability to execute the stated strategy well over time. Always make sure the fund's approach aligns with your financial goals, and if in doubt, consult a qualified financial planner. But our personal recommendation is you can choose existing mutual funds that have track record for minimum of 7 to 10 years, because investing in an NFO like this without proper portfolio track record and research is investment will be risky, because you're taking a blind risk instead of taking a calculated risk. So this is not suitable for someone who's looking for funds to add to your core portfolio, because as I have already mentioned, this is an NFO and we do not know how it's going to perform, and we do not know what kind of risk we are taking with this fund. So this is meant to be a supplementary holding. For example, if you want to invest in it, you can invest it through a satellite portfolio when you have surplus funds, and that too with a minimum investment on a trial basis. And after that, if you find this fund to be performing well, then you can increase the investment amount as per your liking. And also you can consult with your financial planner, as I have told, because they will look into the suitability of the investment objective, risk profile, overlap ratio, and allocation of these funds between your investment portfolio and help you take a more informed decision.
And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.